I want to walk through about the powerful niche product that we should have had years ago. We finally have it for the doctor's loan program. This is not a regular conventional loan product. It's designed for the doctors and high-level income professionals who can apply the non-QM or jumbo products. And you can combine these into the many jumbo loans that we have so that we can win the deals the other lenders can't. So let's break it down. So this is the high-level idea. Doctors are the unique borrowers. They make the great money long term, but early in their career, they usually have these three problems. One, they don't have enough savings. Second, they're massive student loans. And third, their short employment history. And this program solves all three. We can go up to 100% LTV financing for qualified borrowers. This does mean that this is 0% down. So the big part is no mortgage insurance when we do down payment lesser than 20%. So when this person is fresh out of the residency and doesn't have this $150,000 sitting in their savings or checking account, this program actually changes everything for them. And second, the flexible income, where we use the countable signed employment contract to just qualify them. And even if they haven't started the job yet, and as long as the start date is within the allowed window, we can close before their first paycheck. This is very different than any other jumbo products out there. The student loan flexibility comes into play. This is where we win the most deals. Borrowers seems to be in the residency or fellowship, and the student loans in the deferment, forbearance, or the income-based repayment, those payments can often be excluded from the DTI. So I'm talking about exclusion completely, not adding 1% or any additional features. So this also can make a difference in between denial and approval. So let's talk about the very basic qualification details. This is only for the primary residence, only for one unit, and only for purchase or rate and term refinances. And minimum FICO score is 680, and anything above that, we can go up to 95% LTV, and sometimes 100% LTV when the loan amount is below $1.5 million to $2 million, depending on the credit scores. So at 720 FICO score, we can go up to 100% financing. So this program is a manually underwritten product. So this means we actually review the file carefully instead of relying on the AUS. So not every medical workers qualify. This is very specific, and eligible degrees are including these in the list. Ineligible borrowers such as chiropractors don't need to apply. So we don't need to even pitch. So here are where we need to listen carefully when we are speaking to these doctors. If they're currently in residency or fellowship and their student loans are reporting zero or in deferment, we may not have to count those payments into DTI. And this can drastically improve the approval chances. And if they are not in residency, then we can calculate normally either by putting the 1% rule following after Fannie Mae or the payment on the credit report. So residency status will change the qualification details. So this program allows employment contract. If a doctor just signed an offer letter that hasn't been started yet, we can still qualify them. So the contract must be fully executed and clearly state that their salary and start date. And if they're 1099, their contract must show guaranteed pay and confirm no reimbursement expenses. This is how we help doctors buy homes before they even start working. Again, the key here is the 1099 income as well. So if they already own a home and trying to buy a new home, and we may be able to exclude their current mortgage from DTI. So this is how the rules apply. They need at least 20% equity, or the property needs to be pending sale. So just like when we do the equity loan or the bridge loan, the same rules apply. And this helps the move-up doctors who are relocating from different state to state or city to city. And the reserve requirement of 6 months PITI is needed for the departure property. So reserves depend on the leverage. So when the LTV is 95% or under $1.5 million, we need zero reserves. If the loan amount is higher or LTV is above 95, then the reserve is starting from 3 months to all the way to 6 months. Again, this is significantly lesser than any other jumbo product out there. This is fully amortized in 15, 20, 25, and 30 years. And there are also 5, 6, 7/6, and 10/6 arms. No interest-only options are available. No balloons, no prepayment penalties. Again, this is for primary residence. No prepayment penalty for primary residence transactions. If in any cases we run into refinance options, maximum cashback is 1%. So remember the Fannie Mae rule changed. It's $2,000 or 1% of the loan amount, whichever is greater. So most of these products will fall into $200,000 or greater loan amount. So max cashback will be 1%. So when this person is applying for $1 million rating term, asking for $8,000 cashback for paying off their car, credit cards, or personal debt, we don't need to pay them off at the time of closing, but we can give them a cashback and ask them to use it, allocate it whenever they want to, wherever they want to. The delayed financing is allowed for cash buyers within the 6 months as well. So that's the key terms. Exception for the divorce, inheritance, transfer from trust and LLC. The title seasoning applies for the 6 months. And for Texas transactions, no cash out is available. Loan amount under $2 million, we need 1 appraisal report. Anything above $2 million, we need 2 appraisal reports. So remember, the PennyMac has a jumbo product that requires 1 appraisal report with $2 million or below. So same rules apply with this product. So we fall into this Texas. Cash out transaction is not allowed. We have to impound when the LTV is greater than the 90.01%. Ineligible properties with 40 acres or greater. So when you hear 40 acre or below, we can qualify these products. So all these Riverside and San Bernardino properties also fall into this category. The family sales are allowed, but gifts from interested properties are not allowed unless it's a gift of equity. So father giving away to the son, daughter through this transaction can be done. If it's a complex transaction, run it by the management or the account executive before structuring it, so we don't have to question about the pricing